So we got some big tech earnings out today, and I can just tell you flatly, they're not good. But let's go through some of the details. So headlines, Apple sales miss estimates on sluggish economy, supply snags. Apple sales shrink as COVID disruptions in China slow production. Revenue in holiday quarter fell for the iPhone maker for the first time in nearly 4 years. And it's interesting because basically, as you can see here, Apple sales have dropped, 5%, and it's the largest quarterly decline since 2016. If you dig in more in the numbers of Apple, you can see down their earnings per share, right? How much money they're essentially making is down 10.9% year over year. Their revenue is down 5.49% year over year. And then you go more into particular, like sort of what's causing the essentially declines in revenue. So your iPhone revenue is down, 8.17%. Mac revenue is down 28.66%. iPad revenue is actually up. So iPhone down, Mac down, iPad up 29.66%. They have other products revenue that's up. So this is going to be any number of other things that they sell, but it's much, much smaller. The reason why, how could you have some stuff up, some stuff down, but overall down is because iPhone sales make up a big, big portion of Apple's revenue. One of the things that has been unfortunate, and I say unfortunate, Apple doesn't make as much money on computers as they do, say, iPhones, and so that's why they focus so much on their phones. And I say unfortunate because I like Apple computers. I use their products, but I get it. More people are more likely to buy the phone than they are the computer. Services revenue is actually up as well. And then gross margins are roughly about the same. And the question is, and this is sort of be for all the companies, so what is it looking forward? Now, I'll give you some positives and negatives on something like an Apple. So positive Apple is China is reopening, so therefore they should be able to make more products, etc. So negatives, China growth is slowing. That's why we mentioned China, because it's such a big part of the world economy, right? Also in USA, you have consumer debt, which is really high, and so are people going to be buying expensive iPhones, etc.? And also, too, worth mentioning as well, phones keep getting better, and then do I need to buy a new phone every year, right? I may, be good with buying a phone every 3 years, maybe 4 years. I don't need to buy one every year. Yes, some people do, but phones have gotten so good that any upgrade really has to be good to convince me to buy more. Also, too, Google came in with their earnings report. We'll take a look at some of the headlines together. So Google shares slip after sales miss as advertising demand slows. Google posts first drop in ad revenues since pandemic dip. Alphabet's unit's fourth quarter was marked by slowdown digital ad market, broader macroeconomic pressures. And the thing with YouTube, and I can decide to actually say Google, but YouTube's on my mind because this is the main thing is YouTube revenue is really down. And I can tell you guys, I do YouTube all the time. Ad revenue on YouTube is down quite a bit. So anyone who is on YouTube will tell you, ad revenue is down quite a bit. And the other thing too, which is you'll see a lot of YouTubers like really, really asking for money. So I don't beg and stuff like that, but help is always thanked, and I'm always grateful for that. So I do appreciate the support. But yes, YouTube revenue is down quite a bit. The other thing too, what's going on with Google is they're under a lot of pressure from other things. So you have the government that is saying, hey, Google, you're a monopoly. You also have ChatGPT, which caused the whole code red thing, meaning that they're like, oh my God, the AI stuff could really damage our business model. So you have some certainly pressure on Google and overall ad spend, not just YouTube, but overall where our business is going to spend so much money on advertising. So it certainly matters. Was interesting is that we saw basically Snapchat collapse. And then we saw in terms of opposite, whereas Facebook / Meta sort of had that big collapse, before anyone else. And they've definitely recovered in terms of stock price. However, their earnings report wasn't spectacular. It wasn't terrible. It just wasn't spectacular. And essentially the era of crazy growth is tough. What happens, and I've told you guys many times on the channel, when a company is new, they can grow. When they're new, like for example, say Google, they have when they first year they release Gmail, they have say 100 users, and then like the next year they have like 200 users. Oh my God, 100%. And then next year they have 400 users, right? And the next year they have 800 users, and you get my point. The point, and for example, say with Google growth is, let's say, eventually everyone on the planet has Gmail, you can't double anymore. It just slows down the bigger a company gets. Now, the argument you would also make is that the bigger a company gets, they can become a monopoly, can control everything, and you got no other choice. And so Google makes money regardless. However, it does depend on the economy. So that's what's something that's going on with that. Also, too, the big tech reporting, we'll read the headlines. This is Amazon. Projects lackluster sales on slower cloud unit growth. So this was kind of the really important one is for a long time, the Amazon sort of like deliveries and stuff like that, they do okay on that stuff, but the growth, like the excitement of Amazon is really their AWS stuff. And if that's slowing, it doesn't really justify its high PE ratios. And remember, PE is essentially the price of stock compared to how much a company earns. And essentially what you want, essentially in the stock market, is you want to be in companies that are making money and are going to be growing that money-making principles. But it seems like all the big ones are slowing. Amazon did have, however, a decent holiday season. You can say holiday sales gained 9%, but a lot of that, I will tell you, it could be due to inflation. Because think of it this way. Yes, your sales can go up every single year, right? But the price of everything goes up every single year, right? So your sales, your top line can go up, but also your expenses can go up. How much you pay employees can go up. It doesn't necessarily mean that your profits and earnings are going up as well, right? You're just talking about yes, their sales are going up. However, the predictions on Amazon aren't so rosy. This is something that you're going to see a lot of the companies. It's just, interest rates are going up as well. And I understand this past month of January, everything's been going crazy. But I would make the case that this is just a bear market rally and shorts are covering. If you don't know what that means, it means that they were big money betting against the market, right? Betting that stocks would come down. And then when they wanted to take their bets off and essentially cash in, they basically have to start on the buyer side, and then they'll reposition again. So this is sort of why stocks go up and down. Stocks go up and down. People just make bets on the direction, and it's sort of like you have this fight between the bears and bulls daily. But this kind of thing, when these earnings come out light, it's not so great for stocks. Also, too, you have Qualcomm. They're saying, you know what? People just aren't buying phones as much as they used to. We expect to slow in the industry. Qualcomm makes a whole bunch of the phone stuff, and this won't get top news in the USA. But I'm just telling you guys, I'm in Korea. This is massive news over here. Read the headlines. Samsung's Q4 profits plummet 69%, hit an 8-year low, and we're talking about a legitimate company, right? We're not talking about like some scammy, penny stock or anything like that. It's like a legitimate company, Samsung. So when Samsung is struggling with declining growth, it certainly matters. It's a lot of companies, because basically, you had the sort of surge with free money printing all over the world. You had low interest rates, so people were buying. Everyone was hiring. Everyone was having a good time. And essentially, we're coming out of that bubble. Now, I still remain bearish, but people could certainly make the case that the bottom is in. I've said people could make that case. I don't make that case, but people can. And also, too, one thing that I try my best to do is just to report the news to you guys every time, and I don't just like make stuff up. Because what happens is sometimes you'll get sucked into it is on a day-to-day basis. Yes, stocks and markets and financial financial equities, all these things can go up and down, up and down, up and down. But if you want to do well, this stuff is you want to have sort of a long-term perspective and a general understanding of what's going on. That's why I've talked to you guys before about consumers, consumer debt, interest rates, these sort of things, because it's not like I'm shocked that we're seeing, the reports that come out that they do. But yes, on a day-to-day basis, sometimes things don't make a lot of sense. A lot of people in our community are like scratching their heads like, okay, so Jerome Powell said he's not cutting rates, but yet the market is rallying, and it is what it is. Ford had a horrible earnings. They were much less than what they thought, and they're having struggles, building the trucks, etc. So to be fair to the Tesla bulls, yeah, maybe Ford is not your competition, but it could be. I still think Rivian and GM may be a little bit better than that. And then also too, you still have the Japanese automakers, and then you have the Korean automakers, and also have the German automakers. So Ford, to be fair though, they do make the Ford Lightning, which I think will be popular. But in terms of a company, they're just having a lot of struggles over there. One thing is also too is Starbucks, which has been on a really big tear in terms of stock the last month. Someone asked me what's going on with Starbucks. Basically, what it was is with China reopening, it looked a little bit more better for Starbucks. So they're having a tough time overseas. But to be fair, this is past looking, right? So forward looking, will it be better? Do we expect more people to go to Starbucks? Maybe. One thing that was really hurting Starbucks was in places in Asia where the mask policy and even just flat out closing down of stores really hurt their business. So we'll see if they come back. Also, too, with something like a Starbucks, they have a massive supply chain issues. I mean, for example, when every company's going to have a different, exposure to supply chain, but something like a Starbucks, they literally need to get beans in there like every week. Got to get a new delivery. It could be every day. For those of you that worked at Starbucks, love to hear your thoughts, like how often deliveries come. But they process so much stuff. So this is sort of all of my thoughts on the market. It looks like tech came in sort of as expected. I was, I didn't know for sure. I can't, 100% predict the future, but I can kind of get a sense of where things are going. Again, you have consumer concerns, you have interest rates going up, et cetera. So I don't think we're going in a bull market from here. That's just my opinion on that. I'd love to hear you guys' opinion as well. I made a separate video regarding Tesla and ARK Invest in Bitcoin. You guys can watch that as well. So do appreciate everyone's time, and I'll catch you guys in the next video.